Big banks are really starting to get worried about the economy, not just because growth is slowing right now, but because they predict that growth is going to slow down a whole lot more coming in the near future. What's up, everybody? I am Jaspreet Singh from the minorityMindset.com, where money minds rethink rich. When we're talking about the growth of an economy, there's really two parts that you have to look at on a very broad, high level. You have the national debt, and then you have the GDP, the actual growth of the economy. So the national debt right now for the United States is right around $29 trillion. Now, this is a pretty insane number to fathom because our brains are not manufactured to understand what $1 trillion is. But to kind of put it in perspective, if you spent $1 million a day and you did that every single day, 7 days a week, 365 days a year, it would take you right around 2,700 years to spend $1 trillion. So now multiply that by 29, and that is how long it would take you to spend $29 trillion, assuming that you're spending $1 million a day. So this is a lot of money. Now, you have to also compare this to the GDP. So between 2020 and 2021, we have seen the national debt grow by right around 7.5%. In 2021, the GDP is expected to be something around $21.95 trillion, which is right around a 4.85% increase since 2020. So what you can see is your GDP is growing, but not as fast as our national debt. Your GDP, by the way, is really just the amount of money that our economy made. So this is how much money our economy made, and this is how much debt our country took on in order to help fund this GDP. So what we're seeing happen is our national debt is growing faster than our economy. Now, that's never a good thing. I mean, you don't have to be a random guy on YouTube or a physicist to know that that's not a good thing, because if your credit card bill is growing faster than your salary is growing, then you have problems. Because right now, the United States government and the Federal Reserve Bank are trying to grow our economy. They want our economy to grow. And the way that they're doing that is through stimulus. Cheap debt, stimulus money, free money. They're trying to inject this money into the economy in many different ways. That way now we can grow the economy by flooding the economy with these cheap dollars. But the reality is you cannot sustainably grow an economy with free and cheap money. You have to let the economy grow through innovation, creativity, and job growth through companies investing in their own growth. And this is why you have some big corporations and banks starting to get worried. Like the chief economist at Goldman Sachs came out and said that a, quote, substantial economic slowdown awaits us in 2022. So let's talk about what's going on. But before we do that, I need you to do me a quick favor and smash the thumbs up button below. And if you're looking for a way to get some extra coaching or guidance when it comes to investing your money in the stock market, I want to remind you that you can get a free 10-day trial to our Stock Market Insiders program, where you get access to weekly coaching calls from one of our qualified stock market coaches. So every single week you will learn a new stock market lesson, and then our coaches will talk about how this lesson applies to what's going on in the world right now and in the economy right now, because these coaching sessions are all live. This is for people who want to be stock market investors, not traders, because we're going to be focusing in on the fundamental analysis side of things, how to understand companies, how to find an undervalued company, and how to understand the financial statements of a company. So one week you might learn how to understand the cash flow statement of a company. And if Amazon comes out that week and releases their earnings statement, you might go over Amazon's cash flow statement. That way you can learn something and then apply it to the real world. Stock Market Insiders is not a course, although you do get access to our stock market course for free. That way you can understand all the beginner stuff that you need to know about investing in the stock market. You get that for free when you sign up for Stock Market Insiders, but you get access to weekly coaching sessions. And as soon as you sign up for your free trial, not only can you go through the course, you can go through the live coaching sessions, you can watch the previous recording sessions, and you also get access to our exclusive community of serious investors. So if you want to try it out and then see if it's right for you, you can test it out for the free 10-day trial. And I'll put the link to where you can do that in the description below. Let me start by going over this Goldman Sachs article. That way you can understand why big banks are getting worried. The Goldman Sachs chief economist says that the United States economy will be slowing because it is fighting with sticky inflation and supply chain bottlenecks. And then they go on to say that, quote, I would say growth is clearly slowing. Obviously, we're past the peak growth rate, but it's a relatively gradual slowdown. So according to Goldman Sachs, the reason why our economy is slowing and the reason why our economy is not growing as fast as we would like is because of two things. One is inflation, and the second is supply chain issues. Now, this isn't really a surprise. I mean, we've seen inflation across the board, which is causing the price of everything to go up. We saw an insane amount of money printing happen in 2020 and 2021. This money had to come from somewhere, right? I mean, it was free money that the United States government was printing and just paying out to corporations and people. And so now we're paying the price of that through the higher price of goods, through inflation, through the devaluation of our dollar. And then we have the supply chain bottlenecks. We have this issue where you cannot manufacture products in China because manufacturing plants are still not running at 100% capacity. And even if you can manufacture some goods in Asia, well, it's harder for them to get onto a ship to come into the United States. And even if your goods can come onto a ship in Asia, well, now it can come over to the United States, but now we have these massive backups in ports at the United States. So now your goods that are coming on ships cannot come into the United States. And even if you can get over that hurdle, your goods finally come into the United States, well, now you need a truck driver, you need some sort of transportation to ship your goods from now the port to wherever your warehouse is. And we have a massive labor shortage. We have a massive truck driver shortage, which is making it much more difficult and much more expensive to transport products from the ports in California to your warehouse wherever you live. But this is where things get interesting, because Goldman Sachs says that these two things are going to cause a substantial slowdown in the economy in 2022. But then they expect it to pick right back up. They said, quote, "As we go through 22, I think we'll see more of a substantial economic slowdown because a lot of these near-term forces, so the supply chain issues and the inflation, are probably not very long lasting. So the second half of the year, 2022, I think will be significantly lower." Now, that makes sense for this right here, because once we get these supply chain issues sorted out, once people start going back to work, once we can get these ports taken care of, and we can ship products from around the world back into the country and even within the country very easily, these supply chain issues would get better. But actually, I think there's a good chance that we're going to see a shift where we're going to see a massive supply of goods, because a lot of times what happens is when you see a shortage of goods, companies start over ordering, they start overproducing because now they're trying to make up for this lack of supply. And then right now they're ordering all this stuff, that way they can keep up with all this demand. And then eventually this demand is going to slow down, and companies, once the supply chain issues get better, they're going to have a whole bunch of supply. So we could see a glut, we could see a surplus in a lot of goods, which could cause the price of things to go down because of these supply chain issues. But on the inflation side of things, I don't know how we can just make this inflation go away. Inflation is when you have more dollars in our economic system, which ultimately cause the value of each dollar that you earn and each dollar that you save go down. I mean, if we just take a step back and look at this from an economic level, the reason we're having so many supply chain issues is because we have so many people buying things overseas. We have foreign countries that are accepting these dollars. And where are these dollars coming from? Well, it's coming from the Federal Reserve Bank just printing money. We're printing this free, cheap money, and then we're using it to buy things overseas. And then you have these Asian countries that are saying, okay, we'll accept these dollars that you just printed. And they're taking these dollars and sending us these products. This real inflation, the devaluation of our dollar, isn't something that's going to be immediate. Because anytime you've seen inflation happen in history, what you see happen is you see a boom in the economy in the short term. Because all of a sudden, you have so much more money in the economy. You have businesses booming, you have people earning more money. But over time, what you see happen is people start to realize that this money that they're earning isn't worth as much as the money that they were earning before, because now your dollars have been devalued. And this is something that we're probably going to be feeling in 2022, 2023, and into 2024. That's when we really start to see the effects of this inflation. Yeah, we're going to see a lot of price fluctuation in goods in the short term. We're going to see that happen because of these supply chain issues, and we're going to see big volatility in asset classes, stocks, real estate, maybe even in the real estate market. We could see the real estate market slow down or pick back up quickly depending on what happens to interest rates. But this inflation is something that's kind of out of our control. This is really controlled by the Federal Reserve Bank, the central bank, and right now they're still working to increase inflation. They say this very openly. On one hand, they say that, yeah, we understand that inflation is an issue and we want to help manage inflation for the regular people. But on the other hand, the Federal Reserve Bank and the government need inflation. Because if they don't have inflation, what that means is right now, this $29 trillion worth of national debt that the United States government has is going to be very expensive to pay off. Because inflation is when the value of a dollar goes down. And so the government needs more inflation because that's the only way they're going to be able to pay this off. Because then they will be able to pay off this national debt, or at least make the minimum payments on this national debt with cheaper dollars. So the government wants inflation That way they can keep paying this down with cheaper dollars. If we saw deflation, the value of our dollar getting stronger, well then what happens is our $29 trillion worth of national debt just becomes a whole lot more expensive. My opinion on how to save the economy is very different than the governments and the Federal Reserve banks. According to them, if you want to grow and stimulate the economy, all you need to do is just rack up more national debt and then take these free and cheap dollars and inject it into the economy. That way now we can grow the economy faster. But in my opinion, you cannot ultimately grow an economy sustainably through this type of stimulus. You cannot stimulate your way into a growing and stable economy. The way that you have to do that is through here. You have to innovate. You have to promote entrepreneurship. You have to promote creativity. That way now you have people creating more value that can be used. That way we can actually sustainably grow our economy. You cannot just keep racking this up to grow this. But this is where you have banks, the Federal Reserve Bank, and the government saying that this type of inflation is temporary and that this money printing doesn't have any long-term consequences. The concern is, what's the likelihood of Chipotle bringing the prices back down? Or what's the likelihood of a landlord willingly lowering the price of their rent unless we see some sort of economic crash and people don't have money to pay their rents? Or what are the chances that your gym membership's gonna shoot you an email and say, hey, next year we're gonna charge you less money on your gym membership than we did this year? We can hope and pray that inflation will go away, or we can get financially educated. I mean, even the Kraft Heinz CEO has come out and he said that inflation is across the board and people need to get used to these higher prices because these higher prices are not going away. Right now, the United States can still get away with all this money printing because we are still the strongest economy in the world. We have the strongest military presence in the world, and the dollar is the world's reserve currency. If that ever got challenged, and the dollar was ever challenged as the world's reserve currency, and the United States government was challenged as the world's leading superpower, that would be extremely bad, not just for our economy, but for the dollar and for inflation. Because right now the dollar is not backed by gold, it's not backed by silver, and it's not backed by anything else tangible. It's backed by the full faith and credit of the United States government that your dollar has value. I mean, you can compare that to something like gold, where if you want to have gold, you have to physically mine it. It takes time, effort, and labor to mine an ounce of gold, which gives it value. Right? Gold is a representation of value. But the dollar is a representation of value through a promise. Because it takes 12 cents to print a $100 bill. The only reason your $100 bill has real value is because the United States government has value, and they say that your $100 bill has value. So if the United States government was ever questioned of that authority, well then that will ultimately hurt the value of the dollar because that promise is no longer as powerful as it was before. Now the question is, what would hurt that authority? Well, this right here, because you have a lot of countries around the world that are holding on to the United States dollars. They're holding on to this national debt. And this national debt is supported by this asset, our GDP. Think of it like going out and getting a mortgage on a home. Your mortgage debt is supported by the collateral, which is your home. In this case, the national debt is supported by this collateral, our GDP. And so if you have this debt that is worth way more than the GDP and debt that is growing way faster than the GDP, that is what's going to raise questions. And so what we need to see happen is we need to see this GDP grow. And so the government says in order to grow the GDP, we need to increase this. We need to stimulate, stimulate, stimulate. Well, if you really want to sustainably grow this, it's not just through stimulating, it's through actual growth in the economy, through creativity and innovation and entrepreneurship. And that's when the Goldman Sachs chief economist ended the interview by saying, this is not a stagflationary environment as current populist thinking would lead investors to believe. It's more like a traditional cyclical deceleration in growth. Stagflation in its simplest terms is when you have a slowing economy with growing inflation. So you have an economy that's slowing down, people making less money, people not necessarily working, and you have the price of things that are growing. According to Goldman Sachs, although everything that we're seeing right now in our economy looks like, feels like, and smells like stagflation, it's not stagflation because what's actually causing this slowdown in the economy and higher inflation is not stagflation. It's just part of the business cycle where right now our economy is slowing down a little bit. The reason why they're saying that is because, again, they're saying that this inflation that we're seeing is not real. The inflation that we're seeing is due to the supply chain issues, and it has nothing to do with the amount of money printing that we saw happen. Are they right or wrong? Well, I guess only time will tell, but you have to understand that inflation, again, is the increase in the money supply in our economic system. You can see this happen through money printing. We saw that happen in 2020 and 2021. And you can also see that happen through the banking system when banks are lending more money, because as they lend more money gets printed and it enters our economic system. And you see more money enter our economic system through this type of lending when you see very low interest rates. And interestingly, right now, we are in a historically very, very low interest rate environment. And so you see businesses borrowing money. You see people borrowing money and taking out mortgages to go out buy homes because people want to take advantage of these cheap dollars. So as interest rates hover at historic lows, people are borrowing money at historic rates, and this money is now being created and entering our economic system, which you would think causes more inflation. But according to Goldman Sachs, that's not the case. Now, I don't like trying to predict the future because most of the times when you try to predict the future, you are going to be wrong. And so what I like to do is just be financially educated. That way I can make smart decisions with my money today. And even if we do see a market crash, well, that's just an opportunity for me to come in and invest more aggressively. Inflation benefits those who are financially educated, and it hurts those who are financially stupid. And so what you want to do is not be financially stupid and be financially educated. Because when trillions and trillions of dollars were printed and created and they entered the economic system and people got this free money, well, now people took this free money and they spent it at corporations, right? They went to Walmart, they went to Kroger, they went to Amazon, they went to Lululemon, they went to Apple, and so now they go and spend this money. So now where does this free money go? Well, corporations got their bailouts, so that money stayed with corporations, and then people got unemployment checks and they got stimulus checks. And this money from the unemployment checks and stimulus checks ultimately went right back up to the rich and the financially educated, because now these corporations made bigger profits, which was good not just for the corporation, but also for investors. So what you want to be is you want to be financially educated. That way you can benefit whenever you see these type of things happen, because at the end of the day, we cannot control what the Federal Reserve Bank does. All you want to do is make sure that you come out of this on the winning side instead of being the person that's paying the price. This is what financial education is all about. That means taking your dollars and converting it into real assets, things like real estate, things like stocks. We have the Stock Market Insiders program that I talked about a little bit earlier. You can learn more about that in the description below. You can invest into startups. You can help startups grow by providing them with capital. That way now they have cash to go out and innovate and grow even bigger. You can invest into cryptocurrency, or you can invest into physical commodities like gold and silver. This doesn't mean that you want to just throw away all your cash immediately, because if we do see a market slowdown, that is the perfect opportunity for you to come in and buy. And the way that you buy is using cash. But you just need to understand what's going on. That way you can make smart decisions with your money. That way when you see a slowdown happen, you can make the right decisions. And when you see more inflation happen, you're on the winning side instead of being the person that's just paying the price. Because inflation is known as a hidden tax. The people that don't understand what inflation is are the ones that are paying the price. If you like what you saw so far, then you're gonna love this. Have you ever wondered what life would look like if we lived in a world where the people you did business with were just honest with you about what was going on in the transaction? I think about this a lot. Maybe it's just because I'm a money nerd, but I always wonder what life and society would look like if people understood what was really going on with their money. We all go through this system in society where we go to school to get a job, and then we go to work so we can make money, so we can become wealthy, so we can eventually retire. But nowhere along the way are we ever taught how to use our money, or how to build wealth, or how to protect our money. That's what pushed me to start Minority Mindset in the first place, because I never grew up learning about entrepreneurship or investing or money management. I had never heard of these things in my life. And so when I went out and I became an entrepreneur and I started my first business and I got scammed out of a lot of money, I didn't know what to do. So then I started putting out content trying to help people not get screwed over the way I was. But the thing that you need to understand that we are never taught is that we live in a society where we have a lot of industries that profit when you do not understand money. So what do? Well, you get advice from whoever you know or who you do business with. The problem with that is the people you know probably don't know what's best for you, because if they did, they wouldn't be where they are financially. And the people you're doing business with don't want you to know what's best for you, because if you knew that, then they wouldn't make as much money. Just look at banks. Could you imagine what would happen if banks were honest, where if you walked into a bank to get a loan and the bank manager said, you know what, yeah, I can approve you for this loan, but I don't know if you want to do this, because if you take out this loan from me, then you're never going to become wealthy because you're spending all your money on things that you don't need. You sure you still want that loan? If banks were honest with you and people understood how the banking system works, then first, people would not be taking out all these loans to buy things that they don't need. So people would actually start building their own wealth instead of making all these other people rich and making their banker rich. And you also wouldn't see people keeping all of their money in the bank, so the banks would lose money. Because if people understood how the banking system works, well, they'd be taking their money out of the bank and putting their money in assets, which would make them rich, not their banker rich. Banks are important and they have their place, and you need to understand how to use the bank. But just because they have their place doesn't mean that they should be able to skin you alive financially because you don't know how to use a bank the right way. When people have a banking question or a question about loans or how much money they should take out, they're going to ask their friend who doesn't know anything about money, or they're going to ask the bank who's going to want you to take out as much money as possible because that's how the bank makes money. But it's not just banks. Everybody kind of has their own agenda. Insurance companies don't want you to be financially educated because if you were, then you wouldn't be investing your money with your insurance company. You'd be investing your money yourself, and you wouldn't be going to your insurance company for advice on how much insurance that you need. Because when you ask your insurance company how much insurance you need, they're always going to tell you more. Politicians don't want you to actually know what's going on. All they want is your vote. I don't care what side of the political spectrum you're on. You see this on both the Republican and the Democratic side. They will sell you promises and promises and promises to make you like them. And when it comes time for things to be done, nothing happens. What about financial advisors? Did you know that some financial advisors only make money when you make money? And then you have some other financial advisors, they make money whether you make money or lose money, and they really don't care if you make money because they're gonna get paid either way. When you wanna go out and buy yourself your dream car, who do you ask to see how big of a car that you can afford? Well, a car company and a financing company. And their goal is not to look out for your wallet or your wealth or your financial health. Their job is to make as much money as possible for their companies. So they're going to try to get you approved for the biggest loan and the biggest car possible because that's going to make them the most money. Even real estate agents. Your real estate agent's job is to help you find your dream home. Their job is not to help you find a home that is best for your wallet and your financial health. And so they're going to want to help you find the best home possible, which also coincidentally translates to the biggest commission check possible for them because the bigger home they sell you, the more money they make. It's the same with people like me, random people on YouTube. I'll be honest, when I make a video, I want people to watch it and leave me a thumbs up button because the more people that watch, the more money I make. And so people on YouTube will try to do what they can with their thumbnails and their titles to get people to click on their videos because that's how people on YouTube get paid. Most content creators are not going to tell you that, but it's reality. Every content creator out there is working to improve their thumbnails and their titles to get people to click on their videos and their stuff. Now look, you gotta understand what I'm saying here. Does this mean that all people, YouTubers and real estate agents and car salespeople and insurance people and mortgage agents and everyone else are evil because they're after your business? No, that's absolutely not what I'm saying. You have YouTubers with great intentions. You have real estate agents that are very helpful. I am a real estate agent myself and I know a lot of very good real estate agents. You have car salespeople that are nice. You have great insurance people, you have great mortgage people. There are great people in every industry, but you gotta understand what's best for you because not everybody is looking out for your financial interest. And when we don't know how to do something because we're never taught about money, we're never taught about financial education growing up, where do we go? Well, we go to the people that we know who don't know what we should be doing with our money, or now we go to the people that we're doing business with, but these people are also looking out for their wallets. So if I diagram this out for you, over here, you have all these people and all these businesses and all these industries that want your business. So you have banks, you have car people, you have insurance people, you have real estate people, you have mortgage people. All of these people want your business. And when you don't have any financial education, what they do is here, they're coming after your business and you have no kind of like filter knowing what's right. And so what happens is you make money and all your money goes out to these people. Now again, that doesn't mean that all these people are evil. All these people are trying to look after their livelihoods and they're just trying to make a living and feed their families too. This is how the world works. This is how our society works. What you need to do is you need to put up a wall right here. This, we're going to call this your FE wall, financial education wall. You got to understand money and you got to understand where your money is worth going and how much of it is worth going. Because this is where you got to put up a filter. You got to just understand this is how the world works. The majority of people at this point, they get upset. They start crying. They start complaining. Oh my God, this is so evil. Real estate agents want my money and car salespeople want my money and insurance people want my money and banks want my money. Yes, everybody wants your money. That's how the world works. That's business. That's life. People want your money, and in exchange, they're going to give you some value. That's how the world works. What you need to do is you got to understand who is worth giving your money to, and you got to understand when it's worth giving your money. This is where financial education comes handy. You got to put up this wall here. You got to understand what's going on, because the reality is your insurance company is not going to be honest with you. Your mortgage company is not going to be honest with you. They're going to tell you what they can do to give you the most value, the most business possible. They're not looking out for your financial health or your wallet. And so you, right here, if this is you, I'm gonna draw you a nice mustache, or if you were a female, draw you a braid, or as we call it in my native language, a gut. You gotta know what's best for your wallet, and you have to protect this. And the way you protect it is with this financial education shield. You gotta understand how money works, and you are not going to learn this in school, and you're not going to learn how to protect your money from the bank by going to the bank and asking them how you should protect your money. You can probably tell I'm a little bit passionate about this, but the real issue here is this is what's keeping so many people broke, is keeping so many people relying on other people like the government to take care of them, and nobody can live their life financially free because they don't have this barrier. They don't have this financial education, and so now they're drowning in debt. They have no money left for themselves because all their money is going out because they don't understand how to protect their money. This really starts with the tiniest things. Like I was helping my grandma out with some stuff, and she was showing me some of her bank statements, and she doesn't speak English. And I'm looking at her Bank of America bank statements, and I'm seeing that every single month, Bank of America is taking $15 out of her account. And I asked her, what is this? And she was like, I don't know. So I called the Bank of America, and they said it's a maintenance fee. I said, a maintenance fee for what? They said it's a maintenance fee to manage her checking account. And I was like, you gotta be crazy. $15 to manage a checking account when I can just go to the bank down the street and pay $0 for a maintenance fee. From there, it starts to stem into things a whole lot bigger. When you're 18, if you don't have a lot of guidance, what do? Well, you go to college because that's what everyone else does. And if you don't have rich parents who are going to pay for your college, well, now you're going to sign your life away with student loans because you don't realize how much $50,000 worth of student loans are when you sign the papers. But as soon as you leave college, that's when you get slapped in the face with payments, because now you have to pay back all this money that you borrowed plus interest. And then probably worst of all is when people are trying to do the right thing and they try to do what's financially smart, and they go out and they find themselves a financial advisor, but they don't know the difference between some financial advisors and others, and now they have their money with a financial advisor that's charging them huge fees that has no incentive to make you any money, because whether you make money or lose money, they make the same amount of money, and so they have no incentive to make you any money. Sure, on paper it says that they have to look out for your best interest, but really, do they have to? Because whether or not they make you money, they're still getting paid. This is where financial education is so important, because we get brainwashed into thinking that this is normal. That's just society. That's just how the system works, because that's how it always worked. But just because that's how it always worked in the past doesn't mean it has to keep working like that in the future. And so if you really want to break away from the system, you gotta stop thinking like the majority of people. That's why we call ourselves the minority mindset, because we don't think like the majority of people. And you gotta start understanding this financial education. You gotta start putting up this virtual wall here where you understand, okay, yeah, everybody wants my business. That's life. Now you gotta understand where it's worth giving your money to, and once you understand this, now you can understand how to win in this system, because now you can be on the beneficiary side. You can be the producer instead of just the consumer making everybody else rich. This is just how the system works. Hate it or love it. You got to understand how to win in the system instead of just complaining because you're losing in the system. Nobody wants you to know this, because if you knew this, then these people would stop making money. But this is where you got to understand. There are going to be winners and there are going to be losers. I know people don't like to talk about that nowadays because they get triggered over everything, but that's reality. There's going to be winners and there's going to be losers. And the thing that differentiates them is this right here, your financial education. If you have the financial education, you will be a winner. If you don't, then you are going to continue losing in the system. This is where you got to understand how money works and how to protect your money, because if you don't, no one else is going to tell you. Now, luckily, there's a lot of free resources out there. Like you can see the other videos that we have on our YouTube channel. You can check out our website, theminoritymindset.com, because we have a ton of free financial education out there. But you have to be the one to go out there and put in the work and learn, because nobody is going to tell you. Thank you for watching. If you enjoyed this video, here's a video on how to build wealth that I think you'll love. And while you're at it, download a free guide on how to invest your money in the stock market. And as always, keep hustling. If you invest $2 into a lottery ticket and you win, you could win something like, I don't know, $10 million depending on how big the lottery is